welcome. You're watching Business Today TV. I'm Sakshi Batra, and on this special edition, our focus is on the Q4 earnings. Well, Global Health, the company which runs Medanta chain of hospitals, has reported a net profit of 101 crore rupees in Q4 of FY23. That's a year-on-year jump of almost 5 times. The revenue has also seen a jump of 37.3% on a year-on-year basis to 732 crores, which the company says it is the highest ever quarterly revenue as well. Now, to share more insights about the earnings and the outlook going forward, joining us on the show is the top management of the firm. Mr. Pankaj Sahni joins in. He's the Group Chief Executive Officer. Welcome, sir, and thank you so much for taking the time out for this discussion. And congratulations to you for posting these robust earnings for this quarter. Help our viewers really understand the key factors that really contributed to this strong Q4 performance, and what is the outlook likely to be?
Thank you very much for having me. I think it's important for your viewers to understand when we look at our performance over the course of the last quarter and indeed the last year, what we've been able to do is a series of things. Let me start with our newest hospital first, Medanta Patna. We opened the inpatient services for Medanta Patna in January 2022. And within a short period of just about 1 year of operations, we've been able to deliver an EBITDA break-even. Now, this comes off the back of a similar performance in Lucknow, which we were also able to generate EBITDA break-even in a 1-year period. And if you take hospitals of this size and scale, normally it takes 3 to 4 years for them to be able to do that. We've done that in both Patna and Lucknow in a 1-year time frame. When it comes to the performance in Medanta Lucknow, which is just been around for a couple of years, we see that unit also performing very well. We added in beds in both Patna as well as Lucknow over the course of the year. About 300 beds have been added in. We've seen our Lucknow unit grow as well fairly strongly and deliver very robust financial performance. And our mature hospitals as well, of course, our flagship facility in Gurgaon, that is seeing growth as well. We've seen almost a 20% volume growth in our Gurgaon facility as well. And overall, when you look at our volumes, we see about a 32% increase in our inpatient days. We see 677 crores of EBITDA, and 95% of that actually getting converted into cash off the back of the fact that we have almost 90% of our payer mix comes from the cash and the insurance segment. So all in all, I think very strong financial performance. We've been able to also look at our debt position. In fact, we end our financial year 23 with 469 crores of net cash. So we are moving from a net debt position to a net cash position, setting us up very well for the growth that we see coming. And like I mentioned, we're still adding in beds, we're still adding in clinicians. So a lot more still to come, but we feel that the balance sheet, the platform that we have is set up fairly well for the growth. And we are very conscious about the fact that we make very deliberate, very definitive steps to make sure that whatever we do maintains the ethics, maintains the standards of high quality healthcare that we have come to be known.
Right. I'm glad that you pointed out about your, the newer hospitals as well as your mature units as well. If you could specify for us, what is the revenue mix currently between the mature units, and how do you see that scaling up going forward?
Currently, we see the mature units contributing somewhere between 30 to 35% of our top line. And keep in mind that when you compare our Gurgaon facility is about 1,300 beds and our Lucknow and our Patna facility collectively are about 900 beds. So as we move this over time, we will see the share of the mature facilities reducing a little bit. We also, don't forget, have our Noida facility, which will come on board in financial year 25. So we will see further diversification away from Gurgaon. That being said, Gurgaon, of course, remains a very major part of the network. It is the flagship facility. It is our first facility. And that is also showing very strong growth. We've added in almost 80 clinicians at the senior levels just in our Gurgaon facility over the course of the last year. So as we move into newer cities, as the existing units in Lucknow and Patna come on board to a greater sense of maturity, you will see this balancing out. But across both the mature facilities, the slightly newer facilities, and the upcoming facilities, we feel we have a very, very diverse and robust portfolio of hospital assets that will see us well into the medium and longer term.
Right. Mr. Sahni, help us understand, the outlook on both occupancy and average revenue per occupied bed. Both of them have actually improved in this quarter as well. So what is the sense that you get for the coming FY24?
Well, when you look at our average revenue per occupied bed, it's important to understand that the kind of work that we do, which is very high-end, very complex work, is some of the reasons that we see Medanta Group average revenue per occupied bed being amongst the highest in the industry. And this, by the way, is despite the fact that we are not the highest in the market in terms of tariff, maybe third, fourth most expensive facility in the major cities where we operate. So we like to keep our tariffs as affordable as possible, given the context of the kind of work that we provide. But the complexity of care, we have almost 30% of our beds are critical care beds. So we really operate at a very high-end, high complexity nature of work, and that's what drives the RPOPs for us. And we see that continuing as we move forward. Medanta has come to be known as the last stop in Indian healthcare. We've been ranked as the best private hospital in India 4 years in a row now by Newsweek. So a lot of momentum and a lot of strong support for us as we move forward. So we see the growth that is to come with very positive light. We of course don't provide specific guidance on any numbers as such, but we are fairly confident about being set up to take on the challenges in the coming quarters and years.
Okay, and how about EBITDA margins? They've also seen a year-on-year, kind of expansion of 890 basis points to 26.2%. Earlier when we had spoken to you before, you had suggested to us that about 25% kind of margins are ideal, 26.2%. So that's perhaps a little higher than what you had initially talked to us about. How much more, do you see it scaling to?
Well, we are, of course, very happy with the EBITDA margins that we've been able to deliver and that you mentioned. And we are also conscious, which is the reason for mentioning it last time, that, healthcare is a business with a soul, as Dr. Trehan has often said. So while our financial results and financial margins are strong and healthy and at the top end of the industry, our focus internally has always been to make sure that we continue to deliver very high quality care, high ethical care, and focus in on what matters internally to our patients, which is to get them home as soon as possible. So not only have you seen our RPOP growth, but if you look at our average length of stay, we've actually been working to reduce that, which means we can get our patients home sooner, which is of course good for them and good for everybody else. So our orientation is much more around delivering high quality and high impact medicine with the results, following in on that after we do that. As we look at our margins, we feel that we will continue to move along with the industry at the top end of the industry. In fact, so as financial performance in the industry grows, so will Medanta. But we must be cautious about understanding that we believe that healthcare is to be delivered in a very deliberate, very mature, and very stable state. So we are not chasing margin, chasing bed numbers just to check the box or to be able to prove one thing or another. We want to make sure that we are in this for the long run. We are in this for the right reasons, and we are practicing high quality, high ethics medicine.
Correct. You did talk a little bit about your expansion plans, like, the Noida facility, which you say is going to come up in FY25. Help us understand a bit more granular details, both greenfield, brownfield opportunities. How are you looking at those in the upcoming years? And newer hospitals, like you pointed out, and if at all, any additional capacities in the existing ones also planned?
Absolutely. So we're currently at about 2,700 beds. By FY25, we will scale that to approximately 4,000 beds. And that will come off the backs of 3 or 4 distinct initiatives that we've triggered. One, of course, is the expansion in our existing hospitals. We still have bed growth in Lucknow and Patna. Lucknow is currently at 601 beds as at March. That will scale to 950. Patna is at 330. That will scale to 650. And we have some remodeling, renovation, and some work also happening in our Gurgaon facility with our new mother and child services coming in, building out additional oncology capabilities in our Gurgaon facility as well. So the first avenue of growth will be the existing hospitals where we'll be adding beds. And keep in mind, since we've already got superstructure, since we've already put a bunch of the capex in, a lot of that growth will come at a significantly lower cost in terms of both capex and opex, and we will be able to get the benefits of economies of scale in those units. The second aspect is hospitals that are already underway. That includes our Noida facility, which will be 550 beds. That's under construction and moving along well. We've already come out of the ground in terms of the construction happening there. That facility will come on board. And last quarter, we also announced a O&M partnership in Indore for a 350-bed hospital there. We hope to begin construction work on that soon. So that's the second aspect, which is, slightly maybe medium to longer term in terms of the bed additions. And then there are a few more sticks in the fire. We have been engaging with various parties to look at innovative models, some at the asset-like O&M model, some in the greenfield way. So all options open across the areas that we want to go in. But like I said, rather than just kind of chasing the check the box, all these steps are being done in a very deliberate manner with a slightly medium to longer term horizon in mind.
Right. What about the satellite centers, clinics? That's an interest point that, you had talked to us about, previous interactions as well. What's really happening on that front?
Yes, and one of the most important things, whether it's a clinic or whether it is delivering home care services or outpatient pharmacy services, we've seen our outpatient pharmacy grow very well, delivering about 80 crore top line in financial year 23, and that continues to perform well for us. But the focus again is really making sure that we are able to service the patient across the entire continuum of care, not only in hospitals where acute and complex care is delivered, but also in their homes. So really being able to take the care to the patient rather than having to bring the patient to the care. This is something we've been working on since pre-COVID times. Of course, COVID highlighted this fact to many people, whether it is things like telemedicine and digital care, etc. So we are working with our patients, working with the communities that we serve to be able to access them closer to their home and deliver more exhaustive and more complete care across the continuum. And that will remain our focus, to be deliberate in being able to deliver these services, starting out in the areas where we have hospitals and expanding out from there.
Right. Two more questions that I have. One, you did talk about that, you're on the way to reduce debt and also turn net cash positive. When is that likely? And second of all, for all these expansion plans, are you looking to raise any funds?
Well, we've already done that. If you look at our balance sheet as at 31st March, we already have about 469 crores of net cash. So we are already net cash positive. Subsequent to year end, we've actually repaid a bunch of the loans that we had taken for our Lucknow and Patna projects. And as we move forward, we will make sure that we have a fairly healthy mix of debt and equity to be able to fund these projects. I may have mentioned earlier that we look at our debt position at a project-to-project basis. So as we think about our next major project, which is Noida, that will be the one which would have the maximum amount of capex in this coming financial year. We will possibly look at some amount of debt to be able to make sure that we have a healthy capital structure and a good mix. But on the whole, a very, very robust balance sheet. And in addition, of course, to the proceeds from the IPO using to pay down some of this debt, we also have a very, very strong EBITDA to cash flow ratio. So upwards of 95% of our EBITDA is getting converted into cash. So our net cash generation on a 677 crore EBITDA for the year is 645 crores. So again, very, very strong performance on very healthy cash flow generation. So we feel fairly confident about our position on the balance sheet and our ability to scale up. And we will look at doing that in an appropriate manner, taking a healthy mix of debt and equity, but making sure we are broadly conservative on the amount of leverage that we have.
Right. One last question, Mr. Sahni, and that is on the medical tourism that is on the rise in the country. How do you think this aspect can actually help you scale up going forward from here?
As you're aware, medical tourism has been a big focus for the country and for the government with the Heal in India and Heal from India initiatives that have been announced. And we do see, despite the COVID dip, which affected the industry for a couple of years or so, we do see this coming back now. We've seen a 68% in our international patient business, and we do expect this to continue to rise. We also see new countries opening up to Indian medical value travel, whether it is in Africa or it's the former CIS countries, and indeed countries in Eastern Europe and other parts of the world also now realizing the quality of care that you can get in facilities like Medanta in India being second to none in the world. So we feel fairly confident about this. We understand that this is also a major focus for the industry and for the government. And Medanta is very well positioned to be able to capitalize on that, given the brand recognition we have and given the complex care that we deliver.
All right. Well, on that note, thank you so much, Mr. Sahni, for being with us on the show and discussing with us all these insights about the quarterly earnings. And here's wishing you all the very best for the upcoming quarters and hoping for more interactions to get more in business insight from you. Many thanks for being with us. So Medanta definitely, robust set of earnings in this quarter. A lot of factors really working well, and the momentum to sustain is what the management is really hopeful of going forward from here in the coming quarters as well. With that, we wrap up this edition, but do stay tuned on to Business Today TV to catch all the updates from the world of business and stock markets. Until then, thanks for tuning in.
If you like the video, do like, comment, share and subscribe.